Hey guys, welcome to the class 11. In the last lecture, we have discussed about the roles and responsibilities of the sales manager, relationship manager profile. And in this video, we will discuss about the credit manager roles and responsibilities. So let's start the video. So the role of credit manager in the banks or in the financial institutions. I have divided the role of credit manager in three parts. First one, we sometimes calls the credit manager a credit analyst. We call them credit analyst. Some banks call them credit manager or credit underwriter. Some banks call them risk managers. When we call a bank, so you understand that by bank I mean all the financial institution, all the NBFCs, etc. Right? So I'm using the simple term bank. So these are the three names that are given to the credit team in different banks, right? So many people ask me question about what is the difference between a credit manager or a credit analyst, what is the difference between a credit analyst or a risk manager. So here in this video you will get a clear idea about what is the difference in their roles, right? So technically when I call someone a credit analyst, when I call someone as a credit analyst, these credit analysts are not technically credit managers. They are not technically credit managers, although they are more or less performing all the functions of a credit managers, but still they are not the credit manager for two reasons. One, they generally report to the sales team. So they are the part of sales team only in the banks. I don't want to name the two banks, but the two banks that I know are having the proper credit analyst profile that are reporting to the sales team itself, not a credit team department, right? So first they report to the sales team, and second reason that they don't have any sanctioning authority. That is very obvious because they are reporting to the sales team. They are not in the credit team technically, so they don't have any sanctioning authority given by the bank, right? So these are the two basic differences between the credit analyst or a credit manager profile in the banks, right? Some banks may also call credit manager credit analyst, but you don't have to confuse in that. Confuse it with the credit manager profile, just because these two banks that I am talking about, they use credit analyst profile particularly, which are those which are working in the sales department. So what are their roles? What does credit analyst do? The relationship manager, the sales manager bring the documents from the customer. The credit analyst duty is to check the documents first, whether these documents are complete as per the bank policy or not, whether any critical document is pending or not. If there is any document pending, then he has to intimate the RM so that RM can collect the same from the customer. Then their duty is to do analysis, which I call underwriting. They do the CIBIL analysis as well. They do the banking and banking analysis as well. They do the deep financial analysis, more deeper than the relationship manager of business banking that has to do. They are the technically qualified persons for that role. They do the deep financial analysis. They do the deep industry analysis. They do the deep business model analysis more than what is done by the relationship manager, because they are the person who are technically hired to do the same, right? They do the property assessment. By property assessment, I mean they do a very basic level of property assessment, not as deep as the sales manager or relationship manager do, right? So in some banks, like in previous video, I have taught you that in retail segment, in some banks, the credit analysts are also, credit managers are also working in legal and technical segment. They also do legal and technical by themselves, and sales team is not doing that. So in some banks, they are doing legal and technical also. But if I talk about a particular credit analyst profile that is reporting to the sales team, then they properly assist the relationship manager in clearing the legal and technical of the property. Then credit appraisal note making, that is done by the credit analyst. They have to do the client visit and resolve the queries, and they have to resolve the queries of the risk team. By risk team I mean credit team. Since these credit analysts are part of the sales team, they are not part of the credit team. So when they prepare all these notes, all these analyses, they submit these to the credit team for sanctioning of the case. Then the credit team reads all the submissions, and after reading, they raise their observations or concerns. Then the credit analyst, since he has studied all the things in detail and he is also a technically qualified person, he engages with the risk team to resolve their queries. Then it is the duty of the credit analyst to arrange, sanction, and help the relationship manager in disbursements, since the credit analyst is working in the sales department itself, right? Monitoring, that I have already discussed in the previous video. Monitoring, deep down monitoring of all the retail or any business banking loan, they have to be done by the credit analyst. If the credit analyst is not there, then the same is done by the relationship manager or sales manager. They have to assist the sales manager or relationship manager in after sales services, obviously in the business banking department. And one more thing I need to add here, there are no credit analyst profile in the retail segment. There are no credit analyst profile in the retail segment. Credit analyst profile is there only in the wholesale segment, that is the business banking segment, that is the working capital department. Since you have already know that this department is the most technical department in the banks, right? So this profile is particularly in the wholesale business banking departments only. These profiles are not there in any retail department. So after sales services, they have to ensure the customer satisfaction. Presently, this task of customer satisfaction is a role of each and every employee of the bank, not only the sales team, right? And like the sales manager, they have to do the internal and external relationship building, because they are working in the sales team. They are kind of an RM, but a more technical person, but they don't have any targets like the sales managers or the relationship managers, right? So guys, whenever there is a credit analyst in a sales team, remember one thing, then there is no credit manager in that bank. Remember one thing, whenever there is a credit analyst in a sales team in a bank doing all these things that we have studied, then there is no need for credit manager. Then there is always a risk team in that bank. Then the credit team in that bank is called the risk team, on or the persons working in that departments are called the risk managers, right? So they, both of these work in coordination with together, right? If there is credit analyst, then there is a risk team. If there is no credit analyst, then there is no concept of risk team, then there is the concept of credit manager. Have you understood? If there is credit analyst, I am repeating again, if there is credit analyst, then there will only be a risk team. There will not be any credit manager, right? If the credit analyst profile is not there, then there will not be any risk team. Then there will only be a credit manager profile, right? So these are the normal working flow of the banks. There are one or two exceptions to this, when there are no credit analysts and still there is risk team. That is usually in the large corporate segment. Large corporate, where the loan amount is more than 100 crore, 200 crore. In these departments, the relationship managers are itself so technically qualified that they themselves work as a credit analyst, and there is then a risk team in those departments, but that are usually very rare, and that is usually happen in the very large corporate segments. But we are talking about the normal MSME segments. So in MSME segments, it works like this only. If there is credit analyst, then there will be risk manager. No credit analyst, no risk manager, then there will be credit manager, right? So what is the role of credit manager? Remember, if there is credit manager, then both of them are not there. The credit manager do the file checking. Usually they have a subordinate members called the CPS, credit processing associates, to do that work. But I have assigned this work to the credit manager, since they are primarily responsible to perform that task. So checking the file docs, same. Underwriting, same. Doing CIBIL, same. Banking analysis, same, right? Then financial analysis, same. Property assessment, they have then basic knowledge about property and legal and technical, since that role in such case where there is credit manager profile, then that is done by the primarily sales and relationship manager team, not by the credit team. So this is the role that is performed at basic level by them. But in retail segment, in few banks or NBFCs, this role of legal and technical is performed fully by the credit managers, right? Note making is same, they have to do client visits, they have to do queries resolution of risk. That here is a bit change. Since there is no risk team in credit manager profile, then they have to prepare the queries and discuss these queries on the client visit with the customers directly, right? Then here I have written arranging sanction because credit analysts don't have any sanctioning authority. Here the credit managers may have the sanctioning authority with them, so they can sanction the case directly. So sanctioning part is there with them, right? Monitoring part they have to do. After sales services they have to do, but at a very basic level. Most of the after sales services are done by the sales manager or relationship managers only. I have already told you customer satisfaction has to be done by each and every employee, whether front end employee, whether back end employee. Everyone has the responsibility to ensure the customer satisfaction by providing good quality services and as fast services as possible, right? Internal and external relationship buildings is the role of nowadays everyone has to build relationships in order to survive in the market. So now we are talking about the risk manager profile. Risk manager profile is there when credit analyst preparing all the things in sales team, or in large corporate segment relationship manager is preparing all the things and submitting the same to risk team for final decision. So file documentation check is not done by them, since that is done by the credit analyst. Underwriting, they do underwriting, but they do only reading part, since CIBIL analysis is prepared by him, by the credit analyst, and submitted to the risk team. So they do the reading of their submissions, they do the reading of their banking analysis, they do the reading of their financial analysis, they do the reading of their property assessment. Note is not prepared by them, credit appraisal note is not prepared by them, because that is prepared by the credit analyst. Although they find the mistakes in the note prepared by them and ask them to correct their mistakes time to time, right? When I have written that they are reading financial analysis, banking analysis, CIBIL analysis, technically they are also assessing it, but they are not preparing any financials, any CMA, they are not doing any perfos or writing any banking comments, they are not doing any property assessment by themselves. So they are basically analyzing what is submitted to them, right? Queries resolution, client visit they have to do, queries discussions they have to do, because they may have queries of the submissions done by the credit analyst. They have some queries, then they visit the customer and discuss those queries with the customer, then they arrange the sanction. Monitoring is done by them. After sales services are done at a very basic level. Customer satisfaction has to be ensured by them, and relationship building has to be done by them, right? So two more tasks I have written here, that is for your general understanding, that are modern day phenomena. 360-degree. Credit team is studying all the documents of the customers in detail. By the way, I have to update you something, that the role of sales manager or relationship manager profiles are decreasing day by day, and these credit managers are slowly being converted into a relationship manager's profiles, right? The sales manager's main task is to ensure the good quality sourcing, maximum sourcing as possible, maximum logins as possible, and their another role is to ensure the maximum 360-degree relationship building as possible. All other tasks that they have been assigned earlier are gradually decreasing day by day and are being shifted to the credit team, who are sitting in the office all the day doing the back end work, right? So they are gradually converting these credit managers into sales managers. I don't know what time it will take, maybe 5 years, 10 years, 15 years, I don't know, but it is happening gradually. So by these implementation, nowadays the 360-degree relationship building are being getting assigned to credit team as well, because credit teams are studying the ITRs of the borrower. They may know, due to this study, they may know what other banks they have their savings in, because they may see the saving interest, they may see the shares incomes, so they may know that the customer is holding any demat account with some other organization. So they are studying the banking, so they may know the insurance premiums going on in the customer's bank. They studies the CIBIL, so they know all other loans or facilities availed by the customers from other organizations. So they are the primarily resource who are doing the deep understanding, deep analysis of all the documents. So they are primarily being told to submit these findings to the relative department, to the concerned departments. In one or two banks, they are even asked to discuss these with the customer at the time of client visits also. They are required to discuss the 360-degree opportunities with the customer and try to tell these customers that these are the relationships that you are having with other banks. Please bring those relationships to us as well. So this is the 360-degree role, a modern day phenomena that is being imparted, that is being asked by the management from the credit team. Portfolio control. Portfolio control is another thing that is closely related to the monitoring levels, but the portfolio control is mainly in the business banking segment, that the wholesale segment that I have discussed in the previous video. In this, the credit managers are somewhat asked to perform a bit of after sales services to the client. They are asked to ensure that the renewal of the cases are happening timely. They are asked to ensure that the churning of the borrower is happening with us timely, that the interest servicing with us are happening timely, and they are asked to discuss with the customers if they see any gaps here. Some banks are even asking them to close the pending compliances, pending deferrals that are taken by the sales team at the time of disbursement of the loans. Like if they are sometimes asked to comply with their own conditions, like if a credit manager has marked condition of capital infusion of so and so lakhs by 31st October, and 31st October has gone by, but that capital submission proof is still not submitted, and then they are asked to contact the customer and discuss with them why this has not been submitted. They are sometimes even asked to discuss with the customer about any pending thing, like any end use certificate is pending for submission, any document like any insurance copy is pending for submission, any stock statements that are not being submitted on time, right? Any out of order account concept norms that are not being followed by the customers, that they are asked to discuss with these all the points with the customer and take control of full portfolio with them, so that maximum good quality can be ensured with the banks. This is done because sales manager and relationship managers are not so good in implementation of these tasks. They are more related to a field work. They do sourcing, they do 360-degree more than the credit team. So management has more trust on credit team to ensure good health check post disbursement of the loan, right? So this is about the role of credit managers in the bank. I hope you have enjoyed the video. In the next video we will discuss something new, something better, right? Thank you very much for watching. Thank you.